You're at the register, or maybe you're just trying to book a flight you've been saving for months. You swipe, you wait, and then you see it, declined. Not because you don't have the money, your bank account is fine, but because your credit limit is stuck in the Stone Age, $500. One grocery run and a phone bill, and you're already maxed out. You switch to your debit card, feel that sting of annoyance, and move on. But here's the truth. That $500 limit isn't just a nuisance, it's a cage. That $500 limit isn't just embarrassing, it's quietly costing you every single month. It's keeping your credit score lower than it should be. It's blocking you from the cards that actually give you cash back, travel points, lounge access, and real financial leverage. And the worst part? Most people sit with that same $500 limit for years because nobody ever told them there's a ladder. There's a system. And if you know how to work it, that $500 card is just the first step, not the ceiling. I'm about to show you exactly how to climb that ladder, step by step, from month 0 all the way to month 36. By the end of this video, you'll know things that most people with a 780 credit score don't even know. And if you stick with the system, you can realistically be looking at $20,000 to $50,000 in available credit across 3 to 4 premium cards, rewards that actually pay you back, and a financial profile that opens doors most people don't even know exist. And if you're new here, my name is Nick, and this is Build the Bag. This is the place where we break down financial freedom, passive income, smart money habits, and side hustles into actual steps you can take, not just motivational quotes. We're about building something real, one step at a time. If that sounds like your vibe, go ahead and hit that subscribe button right now. It helps more than you know, and it makes sure you don't miss the next piece of the puzzle. Now, let's get into it. Here's the mindset shift I need you to make before we get into the steps. Stop thinking about a credit card limit as something that happens to you. Banks don't hand out limits randomly. They're not picking favorites, they're reading signals. And right now, if your limit is $500, the bank is basically telling you, we don't know you yet. That's it. That's the whole story. Think of it like being new at a job. Your first week, nobody hands you the company card and says, go spend whatever you need. You start with limited access. You prove yourself over 90 days. You show up, you deliver, you don't make costly mistakes, and then slowly you get more responsibility, more access, more trust. Credit works the exact same way, and the beautiful thing is that once you understand the signals the bank is watching for, you can send those signals deliberately. You can move through the system in 3 years instead of 15. The people who get stuck at $500 forever aren't unlucky. They're just playing the game without knowing the rules. And you're about to know the rules in 10 minutes. Let's go through the 5 steps of this ladder. Step 1, the foundation. Months 0 to 6. This is where most people get it wrong before they even get started, so pay attention here. Your $500 limit exists because, to the bank, you are an unknown variable. You could be a perfect payer. You could also disappear and never pay a dime. They don't know yet, so they protect themselves with a small limit. Your entire job in the first 6 months is not to spend. It's to send consistent signals that you are low risk. Here's what that looks like in practice. First, pay your balance in full every single month, not the minimum, in full. I can't stress this enough. Carrying a balance doesn't help you build credit faster. That's a myth that credit card companies love because it means you pay interest. Paying in full every month tells the bank you can manage money. That is the signal. Second, keep your utilization below 10%. Not 30%, which is the advice you'll see repeated everywhere online. 30% is the maximum before it actively hurts your score. The people who score in the 780 plus range aren't sitting at 30% utilization. They're sitting at 8, 9, 10. On a $500 card, 10% is $50. That feels restrictive, I know. Use the card for one small, recurring charge, a subscription, a streaming service, gas, and pay it off automatically. That's it. The point isn't to use the card. The point is to keep the account active and clean. Third, set up autopay for the minimum as a safety net. Set up autopay for the full balance as your actual strategy. The minimum autopay is your backup in case you forget. One late payment can drop your score 30 points and reset the clock on your relationship with that bank. One. So automate the safety net and then manually pay the full balance each month on top of it. 6 months of this. No missed payments, low utilization, no drama. That's the foundation. It sounds simple because it is, but simple is what scales. This is the quiet work that makes the loud wins possible later. Step 2, the first credit limit increase request. This is the thing most people don't know is even possible. And it's honestly the biggest unlock in this whole video. At the 6-month mark, you can simply ask for a higher limit. Most people wait for the bank to do it automatically. Banks do sometimes raise limits without you asking, but they do it on their schedule, not yours. You can accelerate that by making a credit limit increase request called a CLI yourself. Here's how to do it. Log into your card's app or website, find the credit limit increase option, usually buried in account services or card management, and request an increase. You'll be asked for your current income. Be accurate. If your income has gone up since you applied, that matters. Banks lend based on your ability to repay, and if you're making more now than you were 6 months ago, say so. Here's the insider detail that saves your score. Not all requests are the same. Some banks do a soft pull, which is basically a free look at your credit that doesn't hurt you. Others do a hard pull, which can knock a few points off your score. For example, Capital One usually plays nice with soft pulls. You can ask for more money, and your score won't even flinch. Chase, they're usually going to leave a mark. Knowing who's who lets you grow your limit without the credit hangover. If you're on Capital One, which is where a lot of people start with the Platinum card, request the increase at month 6. Low risk, no score impact, and a real shot at doubling your limit. If you're on Chase, be more selective about when you pull that trigger. One more thing. If you call in to request the increase instead of doing it online, you can sometimes get a larger bump. Call the number on the back of the card, ask to speak to someone about a credit line review, and explain that you've been a responsible customer and your income has grown. It's a 2-minute phone call. It's worth it. Step 3, the diversification ladder. This is where the real growth happens and where most people make the mistake that keeps them stuck. At some point in this window, you're going to want a second card. And you're going to be tempted to go straight for the card you actually want, the Chase Sapphire Preferred, the Amex Gold, something with real rewards and a metal feel. Don't do it. Not yet. Here's why. When you apply for a new card, the issuing bank pulls your credit and looks at your entire profile, not just your score, but your total available credit, your age of accounts, your payment history, across all accounts. If you've been at this for 8 months with a single $500 starter card, you do not have the profile to get approved for a premium card. You'll either get declined, which adds a hard pull to your credit for nothing, or you'll get approved with a tiny limit that doesn't move the needle. The strategic move is to go mid-tier. Think Chase Freedom Unlimited. Citi Double Cash. Discover it for those still in the earlier stages. These cards are attainable at this stage. They have real rewards, usually 1 to 2% cash back across the board, and more importantly, they add available credit to your profile. That total available credit number is what matters. Every new card you open, if you handle it the same way, increases your available credit and, over time, lowers your overall utilization ratio automatically. Getting a second card also starts building payment history across multiple accounts, which is a signal banks look at when you eventually apply for premium products. The sequence matters. Secured card to unsecured, starter to mid-tier rewards. Don't skip step. And yes, the banks do talk to each other. Not literally, but your credit report is a shared document that every lender reads. They can see everything. How long you've had each account, what your limits are, whether you've ever been late. The story your credit report tells needs to be a clean one from account 1 all the way through. But here's where most people screw up, and I want to make sure you don't make this mistake. Getting a second card is not a license to spend more. Your utilization target across all your cards combined should still stay under 10%. If you have 2 cards with a combined limit of $3,000, keep your total balance across both under $300. The math doesn't change just because you have more credit. The discipline is the same. Step 4, the relationship play. Now, before we hit the big leagues, I need to ask you a favor. If you're starting to see the ladder clearly for the first time, hit that like button. It tells the algorithm that this actually matters and helps me keep these deep dives coming. All right, let's talk about the secret factor, the relationship play. Here's something the credit card industry doesn't advertise loudly. Banks reward people who bank with them. If you have a Chase checking account, a Chase savings account, and a Chase Freedom Card. You are not just a credit card customer to Chase. You are a banking relationship. That changes how they evaluate your limit increase requests. It changes how they view your next card application. You're not a stranger walking in off the street. You're someone they already have a relationship with and a financial interest in keeping. This is the relationship play, and it's one of the highest leverage moves in this whole system. If you don't already bank with the same institution that issued your credit card, consider moving your direct deposit there. Not forever necessarily, but for a season. Build up a deposit history with that bank, ideally 2 to 3 months of consistent direct deposits and a healthy average daily balance. Then, when you go back to request another limit increase or apply for a better card from that same bank, you can point to the relationship. Some banks will even factor your deposit account history into credit decisions, especially for existing customers. Chase is the best example of this. Chase has a product called the Chase Sapphire Preferred, which is widely considered one of the best entry-level premium travel cards available. It requires good credit, yes, but having an established Chase banking relationship before you apply can make the difference in approval and in the limit you receive on day one. Same principle applies to other banks. If your card is with Bank of America and you move your paycheck there, you become a preferred rewards member over time, which actually unlocks a credit limit increase bonus and higher rewards rates automatically. That's not a rumor. That's a published program. Look it up. The relationship play is about positioning yourself as a customer worth investing in, because that's exactly what a high limit is. It's an investment the bank is making in you. Step 5, the premium card unlock. This is the payoff. This is why we started. If you follow this system, low utilization, no late payments, 1 or 2 mid-tier cards added strategically, a banking relationship established, then somewhere between month 24 and month 36, your profile looks like this. 3 to 4 cards, somewhere between $15,000 and $30,000 in total available credit. A credit score above 750, and a clean payment history that stretches back 3 years. That profile unlocks everything. The Chase Sapphire Preferred becomes a realistic application. The Amex Gold becomes a realistic application. This opens the gateway to business credit cards applications, and the limits on business cards can be enormous. We're talking $25,000, $50,000 limits that don't even show on your personal credit report in most cases. Let's talk about what these cards actually do for you, because this is where the bag building part lands. The Chase Sapphire Preferred earns 3 points per dollar on dining and 2 on travel. Those points transfer to United, Hyatt, Southwest, Air France, and others at a 1-to-1 ratio. A flight to Europe that costs you $800 in cash can cost you 50,000 points. Points you earn from spending you were going to do anyway. The Amex Gold earns 4 points per dollar at restaurants and 4 at US supermarkets. 4 times your spending turned into points, turned into flights, and hotel stays year after year. 0 foreign transaction fees. Access to lounges depending on which card you eventually move up to. This is money, real money, sitting on the table that most people with a $500 starter card don't even know exists. You're not chasing it. You're building toward it, methodically, one step at a time. One more thing to add to your toolkit throughout this whole process. Track your credit score. Not obsessively, but monthly. Experian has a free credit monitoring tool. Credit Karma does too. Credit Sesame. Pick one, set it up today, and link it in your bookmarks. Watching your score move up over time is motivating in a way that reading about it never is. And practically speaking, knowing your score before you apply for a new card saves you from unnecessary hard pulls on applications you're not ready for yet. Check the link in the description for a free credit score tracker. It costs you nothing, and it's one of the most useful habits in this whole system. Before I wrap up, here are 3 rules. These are non-negotiable. Break any of them, and the whole system slows down or stops. Rule 1, never carry a balance with interest. I already said this, but I'm saying it again because it's that important. The credit card companies will offer you a minimum payment that feels comfortable. Do not take it. The interest rate on most starter cards is 20% or higher. Any month you carry a balance, you are paying 20% on money you borrowed. That is the single fastest way to undo every financial win this system builds. Pay in full, every month, without exception. Rule 2, never open more than one new card every 6 months. Every new card application is a hard pull. Every new account lowers the average age of your accounts, which is a factor in your score. Space your applications out. The goal is sustainable growth in your available credit, not a sprint that leaves your score looking choppy and your inbox full of new account notifications. One every 6 months is the rhythm. More than that, and you start looking like someone who's hungry for credit, which is exactly the signal you don't want to send. Rule 3, never close your oldest card, even if you stop using it, even if the rewards are mediocre, even if you've moved on to better cards. The age of your oldest account is a significant factor in your credit score. Closing it shortens your credit history and can drop your score meaningfully. Put a small recurring charge on it, a Netflix subscription, a Spotify plan, set up autopay, and let it sit. That card is quietly doing work for you just by existing. Tying it all together. Month 0 to 6, you're building the foundation. Low utilization, full payments, autopay, clean history, nothing flashy. Just signals. Month 6, you make your first CLI requests. Soft pull if you're on Capital One. Time it carefully on Chase. Call in if you want to push for a bigger bump. Month 8 to 18, you add a second card strategically. Mid-tier rewards, not the premium card you want yet. Chase Freedom Unlimited, Citi Double Cash, discover it. Build the available credit. Build the history. Month 12 to 24, you play the relationship game. Bank with the same institution. Build deposit history. Position yourself as a customer worth investing in. Month 24 to 36, the premium cards open up. The Sapphire Preferred, the Amex Gold, the business cards, the rewards, the lounge access, the financial leverage, the bag. Look, this isn't a hack. It's not a loophole. It's not some trick that only works for people with a specific income or background. It's a system, and systems work if you work them. The person with a $500 limit today can be the person with $40,000 in available credit in 36 months. I've watched it happen. The only difference between that person and the one who's still at $500 4 years from now is whether they knew the ladder existed. Now you do. One question I want you to answer in the comments. What's your current credit card limit and what's your goal? Even if you're starting from 0, I want to hear it. Put it in writing. That's the first step. And if you want to keep building with us, real steps, real moves, real progress, hit that subscribe button right now. We drop videos every week on financial freedom, smart money habits, side hustles, and passive income. Join the community. Let's build the bag. We'll see you in the next one.